everybody. Let me open my window up over here. Gotta open my window. All right, window open. Turn on the soul glow. Just let yo. Good morning, good morning, good morning, good morning. Welcome to, let me take this sweatshirt off. I don't want to get hot. Would you be mine? Could you be mine? Won't you be my neighbor? Good morning, neighbor. Good morning, neighbor. What's going on, man? How y'all doing, man? First of all, welcome to the overnight price action for December the 12th, 2022. Yeah. Good morning, good morning, good morning, man. As everybody filter in, if this is your first time tuning in to Tim's Tidbits, first of all, hit the like button. I have noticed, let me see which hand it is, because y'all be telling me wrong. I'm looking at the video right now, and it's this hand. That's where the like button is right there. That's where it is right there. It's this hand. Y'all be telling me it's this hand over here. It's the left hand. That's what a like button is on my screen anyway. Anyhow, if this is your first time tuning in to Tim's Tidbit, I like to say welcome. If this is not your first time tuning in, I still want to say welcome and give you a nice hearty thank you for always tuning in and hanging out with me and my boy Spidey. Y'all know what Spidey doing. He's hanging by the window. If you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day. Every single day. We even went live this Saturday. Usually don't do nothing on Saturday. And we even went live this Saturday when I usually just sit down and fall asleep in front of the computer while looking at the charts. Y'all pulled up with me on Saturday. Y'all sat down. Some of y'all fell asleep in front of the computer too because you old, just like me, Robinson. Right? Some of y'all fell asleep in front of the computers too. Don't front like you didn't. But every single day, Monday through Friday, we go live twice a day, 9 a.m. Eastern Standard Time to do the overnight price action. Then 6:30 p.m. Eastern Standard Time to do the price action review. I'm primarily a swing trader for the SP 500, aka the SPY, also known as SPY lean around these parts. Sometimes I'll dabble, if you will, in day trading with the SPY or the SPX and the ES futures. They all deal with S&P 500. But we look at the price action every single day. Even though I'm a swing trader, we look at it every single day to see if we can see any swing opportunities, any day trade opportunities. What's the most probable outcome of the price action for today or this week? We don't try to pinpoint it exactly. We just look for the highest probabilities and look for an opportunity to make profit in between those goings and comings. If that sounds like something you like to also pull up every single day, and make sure you hit the like button. I keep doing it over here. Hit the like button. Right? And all the reason why I say make sure you hit the like button, because every now and then I'll go through and look at my videos on my channel. And like the lives, you know, it's typically like anywhere from 30 to 50 people on here every live. And it'd be a nice little ratio of likes. You know what I'm saying? Because I'd be like, hey, hit the like button. Hey, hit the like button. But like on the pre-recorded videos, when I don't be just selling hit the like button, the likes be ashy. The likes be real ashy. In the words of Tony Baker, them likes be real ashy on the pre-recorded videos. It'd be 100 views on the video and it'd be like 9 likes. The likes be real ashy on the pre-recorded videos. You hear me? Hey, man. Let's speaking of pre-recorded videos, before I go see who in the chat, let's talk about the pre-recorded videos real quick. And the reason why, if y'all notice, like lately, I really been telling people about the pre-recorded videos, is because like I like interaction. I like live interaction, talking, wandering off. You know what I'm saying? Like You know what I'm saying? I feel like we family. So it's like, I just like talking to y'all. But everybody who pull up, you know what I'm saying? Even some of y'all that's pulled up right now, y'all may not feel that way. So the pre-recorded stuff, it was just the meat and potatoes. That's why I be like, hey, go look at this. If this is what if you don't want to sit through all this right here, go look at this. If you just coming for the gems, if you just coming for the nuggets, if you just coming to get what you want and leave, hey, here it is right here, right? You got the ICT concepts. We got 2 of the 3. It's a 3-part series. We got 2 of the playlists done already. The lingo playlist, right? And the price action playlist, they're done. You can pull up on them. You know what I'm saying? It's covering the lingo, introducing the lingo you need to be able to trade the ICT concepts. And it's like me showing you how to find the different PD arrays in price action, how I find it. I ain't gonna say how to, how I find it. It's giving it to you straight off ICT and then giving it to you the way I understand it. Gems from the live. If we ever on a live and I go deep into something that you like, man, Tim, can you cut this out and make this a gem? I want to come back and watch this, but I don't feel like skimming through this live. That's what gems from the live are, right? So if you go into gems from the live playlist, you'll see a bunch of different gems. Shout out to homie Zay. Zay pulled up and dropped some gems one day, right? It's going to be what the snippet is going to be about and the date that we talked about it, right? So these are gems from the live. If you ever want to go back and look at different little gems from the live, that's what they are. And if we ever on live and you be like, hey, Tim, can you cut this out and make this a gem? I'll cut it out and make it a gem, right? So, oh yeah, and then in the ICT playlist, if you go into any other videos when you're watching them, it don't matter which video it is, there's a link that says download slides, right? If you click on that, it goes to a Google Drive folder and you have all of the slides for every one of the ICT concepts explained playlists. You got the first lingo section, 1 through 8, and then 10 through 16 is the price action section. And then inside there, if you look at the bottom, there's a weekly goal calculator, right? For anybody who don't know what that is, that's just a we did a something. I can't remember when it was. It was on one of them videos when I explained what this was and how to use it. I can't remember where it was. I ain't gonna hold you. It's a weekly goal calculator. You put in the amount you're starting with, your weekly goal percentage, and it lets you know over a year, you know what I'm saying, if you stick to getting this every week, at least, you know what I'm saying, this is what you can gain over a year. This already takes into account if you made any losses. This is just a percentage that you aim to hit per week, right? You can take losing trades, but as long as you hit this percentage every week, that's what you can expect to do. And then you can come over here and adjust. Like if you don't trade a week, you can just come over here, put a 0 in there, and it'll calculate for you because you didn't trade that week, but it'll keep you on track. You know, and if you go over what your percentage is supposed to be, you can just come over here and say if you went $100 over what your percentage was supposed to be plus 100, and it keeps you on track, right? And the last thing I'm gonna talk about in there is the ICT top-down analysis. This is the PIMDAS chart. If you ever hear me talk about PIMDAS, this is the ICT PD array matrix sheet, whatever he called it, right? If you want to sell, right, from equilibrium, you wait till price comes up into the premium of whatever PD array trader that you are, and you sell when it hits your PDA. If you want to buy, you wait for price to drop below equilibrium and drop down to whatever PD array that you trade. Wait till it hits your PD array and you buy. That's the way you use ICT PIMDAS chart. And this is the order operation, what the algos look for these PD arrays, right? They won't all exist at the same time. You may have 1, 2, 3 together sometime, but it's going to come through and it's going to be looking for them in this order. The old high is the farthest away from equilibrium. The old low is the farthest away from equilibrium, and everything else you can understand is looking for it up or down. That's how you use the PD array matrix. This is all for the free 99. I did not create any of these concepts. The only thing I created from scratch in here is this weekly goal calculator. Everything else is a concept of Michael, aka ICT. And it's all for the free 99. Hear me. Now, let's go ahead and get it started. Let's get it started. Let's get it started in here. Who is in the chat? Here to learn and share. Good morning to you. The birds are chirping. Tweet, 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 tweet. Oh, you got some little parrots on there today. What's up, parrots? What's up, Laverne? What's going on, Rich Genius? Stacks, what's good, my guy? Salute. Hello, Anna. Hello, Elsa. Good morning, Queen. And Mendez, too. Look at the hop. Look at the hop. Jumpy, jumpy, jumpy. Jumpy, jumpy, jumpy. Oh, I got caught up for a minute. That's the old man in me. What's up, Cool It now? Ooh, watch out. What's up, Cool It? What's going on? Regina. You remind me of a West Side Story. Welcome back. We missed you. Welcome back. Welcome back. Welcome back. Welcome back. What's up, everybody? Han Robinson. That's my BFF. What's going on, FC? Buenos dias, Valdez. Buenos dias. What's going on, Pamela? Happy Monday to you. What's up, Angela? Callio. Callio. Oh, what's that? Oh, y'all, hold on. I just got word in my earpiece that a very special guest just walked in the building. Hold on. Ladies and gentlemen, District Attorney Angela Valdez. I know y'all thought I wasn't gonna do it. I know you thought I wasn't gonna do it. I appreciate that. FC Rhonda Green. It was the birds' fault why folk fell asleep. Put up. Hey, I ain't even gonna hold you. I ain't gonna hold you, cause when I went back and I peeked, I was showing Calandra that Timothy. I was showing Timothy where I put the thing up there. Why y'all ain't tell me them freaking birds was that loud? Y'all should have been like, Tim, turn it down. I know Coolin said that he thought I was in the Amazon, but those freaking birds was loud as I don't know what. Y'all should have. Matter of fact, we gonna go outside today. Y'all know how I do. Y'all know how I do. We going outside today. Y'all hold on. Hey, for anybody who don't know how I do or got an issue, but like, what is this dude doing right now? Let me see if I can find the birds, man. My kids be looking at so much stuff on my YouTube, man. I ain't gonna just blame them because I be looking at a lot of stuff too. There you go. Idris Elba. If you don't get off my and then I can't even skip it. It won't let me skip it. While we waiting on Idris Elba. Jesus, how many commercials they got? While we waiting on the commercials, we going outside. We going back to what we did this weekend. There you go. Is my sweetie in here? She probably sleeping. Now we outside. Oh, I gotta close the window since we outside. Yeah, I had to shut the window since we outside. Now we outside. Okay. What's up, SJ? What's going on? What's up, Kyle? Michelle Tucker? What's going on, Michelle? Sanjay, salute, my guy. Good morning. What's up, Lil Hulk? What's your SJ? I need a college refill soon. I didn't print this many documents from my grad. Oh, you ain't gotta print them out. Just save them on your computer, baby. Oh, she ain't here. What What the dude? Can you hear the birds, baby? Can you hear the birds? You can just yell, baby. Hold on. Please tell me this beautiful woman right here. Please tell me you not kin to Robinson. Please tell me you not kin to Robinson. Because I see you in a car with your picture and he in a car with your picture. And you know how black folk do. If we see two people in the car, they together. Please tell me you ain't no kin to Robinson. Tapasha. Did I mess that up? If I messed that up, I jalapies. If I messed that up. I definitely ain't gonna try to say this. We must got some Nigerian family in here today because I cannot pronounce these names today. And Cooley, you can't pronounce this, so you can stop the giggling. Tapaya. We got to have some Nigerian cousins in here today. Welcome to Tapaya. Welcome to. I'm not gonna try to say it. I'm gonna call you Toby cousin. You know Toby Nwinwe, the rapper from Texas. I'm gonna just call you Toby cousin. I ain't gonna try to say that. From this day forward, you will be known as Toby cousin. Because it says new here. Welcome. Thank you for pulling up. What's up, Audrey? Wait, let me get my pillow. So they sound like we're in Jurassic Park. We outside. You know what I'm saying? We got the birds. That's my deck for real. I'm sitting. That's my real deck right there, by the way. Man, look at my wife. My wife Rose is dead. It's like wintertime. It's like wintertime now. So my wife, they used to be all pretty. Hey, focus, Tim. Let's get to what we're supposed to be doing. Okay. Whew. God is so good. Thank you. God is so good. She told us how to say it. Asayua. Yawa. Is it Yawa? Asayawa? It can't be you and wa. Because other languages, they pronounce the vowels the same every time it show up. So I'm going to say Asayawa. Okay. Toby cousin. What's happening? It's simple, MR. Who else? You can call me Ty. Okay then, Ty. Nah, you have to pronounce it. Oh, get off my line. Yes, we outside, baby. We outside. We hanging outside. Let me turn down a little bit in case too, because the other day the birds were so loud the other day. Y'all fooling this morning. What's up, Kareem? Okay, I must have said it right one of them times. Michelle. Oh, we already got him. We got Michelle Tucker. So we got another Michelle. What's going on? Yes, let's get into it, man. I done been on here 19 minutes and I ain't said nothing. The market get ready to open in 10 minutes. Since we got Al Gore's internet pulled up, let's go over here and holler at our girl. Oh, man, you know what I just thought about? When I opened up my Ninja Trader this morning, right, it updated the MES and it moved everything up. I'm gonna try to see if I can go in. I'm gonna see what the difference is, and I'm gonna just try to go in and adjust everything. So the we're gonna look at the ES on trading view today because I'm just gonna like see the dip. Oh, y'all heard the woodpecker? It's a woodpecker out here. I'm just adjust everything down. Just say like if it's a 30-point difference, I'm just go in there and adjust there. Yeah, I don't know why I'm telling y'all that. Anyway, let's go holler at our homegirl Spylene, man. For anybody who don't know who Spylene is, it's the S&P 500, aka the SPY, aka an ETF that tracks the S&P 500 performance. And we wrote a song for you. You want to hear? Here you go. Y'all get together, clear your throats, get in the right key. Robinson, get us our note. Get us our note. Me. Y'all ready? Here we go. Spylene, where you at, baby? Hey, how you doing? I'm glad that you can. Hey, Spylene, what you doing? You trying to gap up? Spylene trying to gap up? Are we going to do what we talked about yesterday and just try to mosey back toward one of these equilibriums before CPI? I don't know. Let's see what we do. As y'all already know, anytime we be having big news coming out, the market makes a move. See this move it made? It tanked, right? In front of the news, and then it just slides to the right. Slides to the right. Before the news come out, right? And it likes to hover in the middle of the road. It likes to stay in the middle of the road. It likes to stay around fair value, waiting for the news to come out, right? And we got heavy news. We had heavy news Friday, right? So we made our move. Then we slid to the right. The news came out Friday. We didn't do a whole lot. Why? Because we got heavy news tomorrow, right? So today, we may continue to slide to the right until CPI come out tomorrow, right? And then guess what comes out on Wednesday? We got FOMC with the Fed rate announcement. So the market probably going to continue to slide to the right. They go that woodpecker again. I wonder if that's one of them big woodpeckers. Back in, I think it was back in August, my brother sent me a picture. Sent me a video of this humongous. I'm gonna show y'all that later when we finish. If you want to see that humongous woodpecker, stick around to the end. I'm gonna show y'all that big old woodpecker. So let's go look at the price action and see what we got going on, because we about to have like a dollar and some change gap up. We closed at 393.28 Friday, and right now the market is at 394.46. So that's like a dollar and some change. About a dollar and close to 20 cents right now. A little over a dollar gap up. Let's go over here to the ES. Shout out to cousin Chris. Shout out to cousin Chris for telling me you set up at close. Where was that? Shout out to cousin Chris who told me about this B adjust down here. Right? Next time I talk to Alexandria Cartwright, I'm going to choke her out because she didn't tell me about this. When I uncheck that, right, it doesn't adjust the prior candles to the new pricing structure of the new contract. Because if you look at Thursday and Friday, because the contract rolled over Friday, you look at the Thursday and Friday candles, you see how they offset like that. They tell a story of we gapped up, pushed up, and came back down. But if you hit the B adjust right there, you see how everything lines up. No, we didn't gap up. We just opened up and went up and filled in the rest of this daily fair value gap. Shout out to cousin Chris who put me onto this. I'm not a trading view expert, so I never knew this button existed. And why would I know what B adjust means, right? Why they ain't put P adjust, price adjust, cost adjust, contract adjust? I don't know what does the B stand for? Basis? Does B stand for base? I don't know. B adjust. And then when you hover over it, it says adjust for contract changes. Why didn't you just put adjust for contract changes down here? Right? You put B adjust. You're confusing me. Okay, let's go over here and look at the price action. Let me get the one that we use to put out our oh, there they go. I'm like, whoa, wait a minute. I know we marked this stuff out. The one that we put our markings on for the this weekend chart prep. We're gonna they got a woodpecker again. We're gonna go down to the hourly. Looking down to the hourly, we didn't mark all of this. As y'all can see, once we opened up, once we opened up, we because this is where we closed at on Friday. This was Friday's close at 39.64.50, right? Friday's close at 39.64.50 right there. I usually don't mark this on here, but I'm just gonna put a line there so I know what a goings on. I don't have a template in here for this, so I'm just putting a line there so I know that that's the close. Okay, so that's Friday's close right there at 39.64.50. We opened up just a teeny tiny gap up, teeny tiny. I don't know if we went up or down first, but we did touch that hourly fair value gap there. I don't know if we went up and touched it first and went down. I guess I can go down and see what we did first. So we went up first. See, we had a teeny gap up, pushed up, touched the hourly fair value gap, and then went back down. Okay, so we pushed up, touched the hourly fair value gap, pushed back down, took out, and tapped the sell side liquidity. Came in, touched the sell side liquidity. Still dilly-dallying right here. Pushed down on the 8 o'clock candle. This will be the 9 o'clock candle on Ninja Trader or anybody that they name the candles for the ending time, right? Made a low, set a low for the Asian and Sydney. Then we start on the 9 o'clock / 10 o'clock candle. We started to make our way back up to the Friday's close, right? And then we just consolidated right there, roughly around Friday's close at 2 in the morning, which would be the 3 o'clock candle on this would be the 3 o'clock candle because it started at 2, in at 3, right? Yeah, so this would be the 3 o'clock candle on wait a minute. I ain't gonna try to convert it no more. I'm just gonna name the candles as I see them on here. It's giving me a headache. So on the 2 o'clock candle, we came back up. Then we touched the fair value gap again. 39, 69.50, 39.69.75. We didn't touch fair value gap any higher, but we made a relative equal high right there. Push down below this little consolidation right here, and then blast off on the 4 o'clock candle, creating an order block and an hourly fair value gap that we will mark for both of them. I don't have any templates for hourly, but we would just pick one. We would just pick one and then change it to 1 hour. Because I usually don't mark trading view this low over time frame.
So still have not filled this hourly fair value gap yet. Still haven't filled hourly fair value gap. I want to say it was a 4 hour in that same area. Let's check that really quick. Yes, it is. We have filled the 4 hour fair value gap. The 4 hour fair value gap has been filled in this area right here that we're trading up in. There was a 4 hour fair value gap that we have filled. We just don't have the retrace. So we got the gap fill, aka wax on, aka reprice of this 4 hour fair value gap right there. For anybody who can't see it, I'll mark it out real quick. Right now, we got a 4 hour fair value gap right there that we have traded up through. Right, went to the outside of it and wick back down. So we got the wax on. All we would need is the wax off of that, but I'm not gonna put it on there. I'm just gonna keep that in mind. We still have filled it, and to get the wax off, we would need to come back down to a little past equilibrium of this 1 hour fair value gap that we made on the way up. Let's go back down to the 1 hour. We've hit some consolidation right here. So since we've hit that consolidation, let's put all our fib tools to see what we can possibly do. If the bullishness continues, you hear that right now? Let's put out our fib tools and put them to work. What we've been testing, I've even taken a live. I've been testing it, and I've even taken one live MES trade on it while I slept. We got consolidation right here. It's starting to consolidate. We know price likes to consolidate at equilibrium or fair value, if you will. So I'll come back to the most predominant low before this aggressive move by the algos right here. Heavy distribution right there, right? So I'm going to pick this low right here, and then I'm going to bring this up, turn off this snap so I can move it around freely, right? And I'm going to bring it up until my equilibrium or 50% is right there in the middle of the consolidation, right there. So if this right here is the consolidation that the that's 50% of this range, I'm projecting that the algos will push price up to right around this 39.95 area, in which will put us right at the daily equilibrium, which is looking very proud. Yes, the daily equilibrium from Friday, and that align with what we have been. Oh, the market is open. Why y'all didn't tell me the market was open? Oh yeah, you did. Thank you. The market is open. Be careful what future contracts you're looking at. Yes, appreciate that, Robinson. Be careful what future contracts you're looking at. We did have a contract changeover on Friday, so be very careful because the volume is going to start to shift to the March delivery contract. It's not saying that you can't trade the December. It's not saying you got to trade the March, but just be careful which one you're trading, because the volume will start to shift, and then it's like a $30-something price difference. So the numbers that I'm calling out are based off of the March delivery, because TradingView has switched over, and now NinjaTrader has switched over. Whatever trading platform you own, make sure to see, like my platforms are set to switch the contract automatically, right? But if you don't have yours to switch automatically, just be careful and understand which one you on. Appreciate that, Robinson. Back adjust. That's what it means. Appreciate that. Cool it. Yo, what's up, Zay? What's going on, my guy? Shout out to homie Zay. So yeah, that'll put it right in line with what we was talking about, with the price just trying to make its way back to fair value, make its way back to equilibrium, and chill and hang out for CPI. That would go right in line with that. And not saying that it's a buy recommendation, not saying you got to trade it. I like to take Monday to see what the price going to do, unless it's just something so overwhelmingly apparent that I just can't refuse it. But we got CPI tomorrow, and then we got FOMC on Wednesday. I already told y'all I probably won't do nothing until after FOMC, right? But I just noticed that we was consolidating right there, so I just ran the fibs, and I want to see how it plays. Speaking of ran the fibs, see how it play out. I meant to post this in the Discord last night, but it slipped my mind. I took a screenshot of hold on. That's all I got on the price action for the overnight price action. We ain't do much. That's all I got. So if you want to tap out, I appreciate it. Please, if you got to go trade, please trade safe. If you're not gonna trade, please take copious notes so you can go back and study what you saw today. And I'll see you at 6:30 for the price action recap. Make sure you hit the like button on the way out the door for me, please. Thank you. Okay, for everybody else, if you want to see what I got to say now, hang out. If you want to see the video of the big woodpecker, hang out. What was I saying? Oh yeah, I took a screenshot. I took two. This was the first one I took. I meant to post this in the Discord. This one I was waiting for this to come back down. This is not the screen. This is not the screenshot I'm talking about. But this is when I was waiting to see if we was gonna come down this far and then go back up. But we didn't come down that far. We just dilly-dallied because I was like, okay, we consolidate in there. That's the last high. I want to see if we're gonna come down that far, but we never came down there and got it. We just dilly-dallied all night and started to go up. You know, we touched that and we went up. That's not the screenshot I was looking for though. This was the one on the lower time frame. I did one on a lower time frame to see how far 39.40. Let's see what price did at 39.40. Let's see what price did at 39.40. So at 39.40. Oh, I got adjusted. It wasn't adjusted then. So I got to figure out what 39.40 would be on a new contract. So the bottom of that was at what's that 39.24.50, and that was this candle right here was 39. Wait a minute. Yeah, the candle even looked different. Yes, so this candle was 39.24.50. And what is it now? 39.24.50. And that right there is 39.56. 39.56.25. Okay. 39.56.25 minus 39.24.50. 31.75. So it's a 31.75 difference. So it went up. So 31.75 plus 39.40. Hold up. Did I do that right? No, I didn't. I typed the wrong thing in. 31.75 plus 39.40. So 39.71. So let's just say 39.72. Close enough for government work. So what did price do around 39.72? 39.72. Never got there, but right here it did stop and pull back a little bit. So hey, that's close enough for government work. So it's still tending to work. That's 39.72 right there from there, but down there it backed off a little bit around this 39.69. What I had on 15 minutes. I guess I could have just did this like this right here. Put the consolidation at 50%. Okay, so boom, here, this one here, it didn't reverse. It didn't reverse on this one here. Would have got clippity clapped on that one, right? But it is a place where the algos are reacting to it. Would have got clippity clapped on this one because it didn't reverse. If I would have taken it on that, like trying to take a reversal on this right here, would have got. Oh, wait a minute, no, I got to get on the right. Was it this one? Close enough for government work. Yes, would have got clapped on that one. What's up, Woodpecker? And then now it's starting to consolidate again here. So it wasn't a reversal, but it is an area of interest to the algos because it's not a reversal spot, but it is an area of some type of support because right there you see where the down close candle was set, that we set that order block right there, and now price is like consolidating just above it. So again, for the reversal technique, you would have been clapped, but you can't win them all. Ain't no strategy 100%, but it is an area of interest because the price is consolidating there again. And again, the other one that I'm watching now is to see if price comes back up. If we go to the top of that order block, the opening of that order block right here, put the 50% at the opening of that order block, that puts us right at equilibrium. Right from this low to this consolidation, right at the opening of the order block, that puts us right at equilibrium right there. So hey, it tells a nice little story. It may not always be a reversal, but it sure enough line up with the algos to put you in like areas that the algos watch. Equilibrium, reference points, reversal points. Hey, it's work. I like that. I kind of thought about doing that day. Let me see if I can. What did I just hit? I turned the birds off. I'm sorry, y'all. Hold up, I gotta sneeze. I'm back. All right, let me see if I can put this in my Dropbox. See if I can put this in my Dropbox.
Well, I don't think Woody Woodpecker.
Let's put it on the US 500. Shout out to homie Zay. Let's put it on the US 500. That's a mean little down count on the US 500. What's going on? We dumping? Did we dump? Yeah, we did pull back. We came back down to this 15-minute fair value gap right here. Never mind. I ain't adjust none of this. Ignore everything I just said about the fair value gap. Yeah, it is a fair value gap there. Is the US 500? Yeah, it's a fair value gap there on the US 500. What's this weird wick? Man, get out of here, US 500. Put Spilene up there. We pushed back down close to Friday's low. We came back close to Friday's low. What was I doing? Oh, Dropbox. I need to say this to Dropbox. Look at that woodpecker again. He know we coming to check him out. Save the Dropbox. Now, Love and marriage, love and marriage go together like a horse and carriage. This I tell you, brother, you can't have one without the other. Love and marriage. Where we at? Had a little reaction after coming down close to the low. Tapped into. Is that a? What is that? I'm trying to see what kind of gap is that? Is that a daily fair value gap? Yes, daily fair value gap. We touched the top of the daily fair value gap, getting a slight reaction off of that. I need to have my what's name updated so I can all right, let me see if I can.
Boy, I don't think Woody Woodpecker want no beef with this little fella right here, boy. Man, what?
Look at that woodpecker. That is the biggest woodpecker I've ever seen in my life.
I don't want no beef with that little fella. Look like he ready to kill one of them mockingbirds.
What kind of woodpecker is that?
Nigga, this
I think we looked it up.
woodpecker.
I think we looked it up. I can't remember what he said the name of it was. I can't remember what the name of it is now, but I think huge. Look at the wing on him.
Man, nigga look like he a duck mixed with woodpecker.
When our boy jumped on the car, look how big that bird is.
Man, that's somebody pet. Back to the tree. Back to the car. Oh, he probably can't fly.
Never seen him that big. I ain't never seen him that big either. It's called the
right here. I'm supposed to catch
we had looked it up. We had looked it up. It's called the ivory-billed woodpecker. That's what the name of it was. He said they about extinct now, but an ivory-billed woodpecker. Yeah, let me see. Let me go back and look at the ES and see what's going on. We seem to be just hovering right now. We started selling down. Jurassic, yes, Jurassic for real. What I said it was 31.75. We said it was 31.75, wasn't it? Let me see how this work out. Let me go ahead and see how this work out. We said 31.75, I think it was. So oh man, I'm about to do math on every last one of these. I can't just grab them and slide them up. See, that's one thing I like about TradingView, like with they charting. Like I could just grab all these and slide them up together on TradingView. I can't do that on NinjaTrader. I can't just, I could highlight them all. I could come here and then highlight all these, and I could change. I could change like the visibility, lot, auto scale, stuff like that. I don't know what I just did, so I'm gonna hit cancel. But I can't just grab them all and move them up. Now I'm gonna have to sit there and do the I'm gonna have to sit there and do the math on all them things individually. It worked. It worked. Hey man, y'all ain't got nothing else to do. I ain't got nothing else to do. This is what I'm about to do right now. Ain't nobody got nothing. If ain't nobody got that, that's what I'm about to do. Safe flight repair, safe flight. What? Let's say safe flight repairs, safe flight replace. What is that? What are you talking about, Cooler? See, Robinson, Audrey liked my melodious voice. If the woodpecker went at oh, oh yeah, yes. I don't know what kind of woodpecker that was. Long say he getting ready to eat one of them mockingbirds. Long say he look like he for to kill one of them mockingbirds. 39, 36.25 plus 31. 39.68. Love and marriage, love and marriage. Da, 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 da. Man, I probably would come out quicker just moving all this stuff. He gonna do that. A commercial. Oh, talking about safe flight. Some of this math I probably could do just real quick. I'm pretty sure Audrey was laughing at your. Hey, hey, man. What you doing? We still. Oh, I got it on daily counters. Let me switch. Why y'all tell me I had it on daily counters? So I could. Let me switch it back to the other counter. So if you're gonna actually sit here and watch me do this, you can actually see what the price doing. That was line 1167 was the last one I did. Line 1167. We'll look at the 5 minute too skinny. Let's go to the 15 minute. Wait a minute. Let's look at this 5 minute for a second. Okay, we pushed up, hit this 5 minute fair value gap, pulled back down. Got a breaking market structure to the downside. We had a breaking market structure to the downside, came down to this 5 minute fair value gap right here at this breaking market structure to the upside. We're in the middle of the road. Okay, we came down, breaking market structure to the downside, pushed back up, filled in this fair value gap, got up here to this order block right here. Now we're pushing back down just a tad bit. Let's see how this plays out. Okay. Got this order block right here that we can testing with. If this order block does its job, we should push up. But if we come down and disrespect this order block, we may be continuing down because of this, or it may continue to be chop slop. I'm predicting chop slop because we got CPI tomorrow. We did close that fair value gap very cleanly. We closed that fair value gap very cleanly. Did we go tick for tick? High on that candle right there, 39.69. Low on this candle right here, 39.69. Tick for tick. Closed that fair value gap very cleanly. Consolidation. Let me mark out this 3 o'clock candle. So the open at 3:05. Oh, that's right there, close to the midnight open. That thing's right there, like kissing cousins. Yeah, price was real tight. Price was real tight last night because the London and the midnight were right there together. Yes, London and the midnight right there together. So price was trading real tight last night. Yes, it's about to be chop slop. Put on 15-minute candles and let it rock while I adjust this stuff. Again, 15-minute everything. This liquidity void right here closed in that liquidity void real clean, right back there at the breaking market structure. Right at the breaking market structure, liquidity void. We closed that in real clean. Nothing down here that needs any attention. That's clean. That's clean. That's clean. You can get out of here. This order block right here. You can get out of here. Oh, wait a minute. I ain't adjust none of this stuff. Let me stop deleting. Well, it ain't gonna hurt now. I don't feel like redoing all of that stuff, so I'm just going to delete all this except for my box, and then just start back over. Let me get my main stuff. Let me adjust my main stuff real quick because I ain't adjusting everything. 4178.5 plus 31.5. 40, 210.25. Copy. Oh no, I did it wrong. God dog it. I hit apply to. The top would have been 42.10. Let's see what's this. This was the green, so that's 4,009. Okay. This one here. $38.72. 36.7. 37.03. 37.03. 353. 353. The rest of this stuff I'm just gonna move. Two. Yeah, it's much faster. Much faster than the other way. Well, with them big boxes, it ain't faster. Cause them big boxes ain't got nothing to reference. But these right here, I got something to reference. Have we had touched that water block last time? I don't remember us touching that water block last time. I could have swore the last. Let me look at the picture. Oh, it's not in there. It's not in the shot. It's not in the shot. God dog it. It's not in the shot. Oh, wait a minute. I just saw another one that we had went up to weekly equilibrium last time from when we ran it. When we ran it from there to there, we had projected it to hit weekly equilibrium. Did we get to the weekly equilibrium last time? Oh, we didn't get that yet. Probably ain't get that yet. Okay. We need to get down to 4 hours. $4 fair value gap. That's the one that we took that out already. That's the 4 hour fair value gap right there. In the hourly. Ain't none of this stuff lining up right. I just get off my screen, man. Get off my screen. All of it. All of it. Out of here. The foolishness. All of it off my screen, man. None of it making sense. Get out of here. Start over from scratch. Start over from scratch. Off my screen. Foolishness. We doing absolutely nothing. Price just dilly-dallying. What's this high right here? Get out of here, chart. What's the high right? God dog it. All this junk on my screen. What is this? 40.22. 39, 38, 39, 89, 50. Just on the day. 30. 13. All right, so that's Friday's equilibrium right there. $39.57. 57. So we took it out. Yes, got all that taken care of. Oh, got to get my weekly together. Get all my weekly stuff together. $47 on 150. God dog it. 41 on 750. All right. 39.46. 39.46. 46. $26.75. All right, so just like that. Just like that. Okay, so now everything is in order. Everything is in order. So we slowly making our way back to this daily equilibrium here. Slowly making our way back to it. We've got into this hourly fair value gap, this 15-minute fair value gap, should I say. Let me check the hourly and see if anything there. Getting close to the top of the hourly fair value gap. And then now let's go match that up to the 15-minute. Mark out the hourly, then I'm going to adjust it to the 15-minute. All right, so that's the hourly. Now let's go look at the 15-minute. So close to the top of the hourly. The hourly will bring us right to the breaking market structure right there. Again, the going from this low, putting the consolidation. No, not that low. This is the low I want to use. This is the low I used last time right here. Going from that low. Was it that low? No, it was this low. I had it right the first time. Yes, because it was the closest low before this energetic move right there. Right, and we came right to the order block. When we came to the top of the order block, it was putting us right back at this consolidation here, right at this small little 15-minute fair value gap right there, right at equilibrium. That's what when we measured it out right there on the measure of this right here. When we measured that one up. And again, this one right here got us, that would have got us busting the head on trying to take a reversal on that. It would have got us busting the head, but it was a significant area because it consolidated there. Then once it broke the consolidation, we filled that liquidity void to the tick. No, it ain't to the tick on this time frame. I don't remember which time frame it was, but it was to the tick on something. One of them time frames, it was to the tick. Might have been an hour. It might have been a 5 minute. I think it was a 5 minute. Was it a 5 minute? I think it was a 5 minute. Oh. Consolidating here. Now. Consolidating right there now. Baby sitting there, got an order block right there. Now, price is still telling us, it's still telling the story of wanting to get here. And the reason why I say that is, right, we had the heavy distribution up here. We set an order block right there. Then we consolidate it right in that area, right? Price usually likes to consolidate at equilibrium or at fair value, right? So we got the heavy distribution, set the order block. That's a reference point. Consolidate it, right? Showing that it's equilibrium. I mean, it's fair value, right? And then we sold down into this liquidity void. Then we came back and set an order block in the exact same spot right there. All right, set an order block in the exact same spot. Right, we took off there. Set it in the exact same spot. So now we're coming back to fair value, right? Coming back down to fair value, equilibrium, right there at an order block, and then prices reacting off of it, pushing up. So it's still telling the same story of wanting to get right there. At least, maybe just to, it ain't, ain't nothing perfect. It ain't gonna be like to the pip, to the tick, but it's still telling that story of wanting to get there. Again, this ain't no reason for nobody to try to buy nothing or jump into nothing, but it's still telling that story of wanting to get there and what other things that's in that path. We got another, we're inside this 15-minute liquidity void right now. And we got one more fair value gap at the top of the void that we just came into. We just came into the fair value gap at the top of the void, right? We've almost filled in the hourly fair value gap, but now we're inside this 15-minute liquidity void here with this fair value gap at the top of it. Another small fair value gap right there at the top of our field extension. Pushed up, set another high, got a new high again. We're coming back down. Still haven't touched this order block yet, but price, speaking of, just touched that order block. I appreciate y'all hanging out with me, just staring at these charts like this, man. 32 people still hanging out, just staring at these charts. Y'all could be anywhere else in the world, but you're hanging out here with me. Still reacting off of that order block. Oh, we done ran out of birds. We done ran out of birds. That's it. We done ran out of birds. We're going to go back inside to the library now. Oh, that was so refreshing to hang outside. I'm glad y'all hung outside with me. Start from the weekly onwards. What's that? Start what from the weekly onwards? I see that was a long time ago. Tim, you still sleeping? I think it's the birds. No, it's me staying up all night. That's what it is. They were lulling me to sleep though. They were lulling me to sleep. Oh, I had looked at this right here. I want to point this out too. I was looking at this right here. Last night we had I meant to screenshot this in the Discord too. We had divergence again on the hourly charts at the of Friday. At the end of Friday, we had some divergence again. And I mean, we ain't blasting up, but we did go up. Right, we had the SMT divergence on from Friday. I just ran it all the way over to this was Sunday's open right here, and I ran it over to, let me see here. So that was this was Friday, and then that was the lowest low. That was yesterday's open. So I ran it over to the lowest candle on the NQ. That's what I did. So let me scoot it over here. All right, so that takes me to the lowest candle on the NQ, and you see we got the SMT divergence. Like the NQ is failing, refusing to go lower. Right, the ES made a lower low. The NQ, the YM made a lower low. You know what I'm saying, at the end of the day Friday, and then the NQ refused to go lower. We had the SMT divergence, right, and we were in the discount. So we had the SMT divergence while we was in the discount, and the NQ was not showing the desire to go any lower. So that gave us the SMT divergence in the discount, meaning, and you're in the discount, so you're looking to at least have some kind of bullishness in the short term, at least in these hourly candles. And then there it is right there. Not all three indices start to go up together, right? They did go up together, came back up. All of them came back up within the YM filled in this big hourly fair value gap. The NQ almost filled it, and then the ES almost filled it, and now it's consolidating. The Dow is still pushing strong. The NQ is consolidating more, and the ES is the red-headed stepchild in the middle. It's kind of like in a consolidation, but it's not consolidating as bad as the NQ is. But all three have started to move up. So the SMT divergence to the upside played out again for this Lord. And what I tend to look for when I be looking at the SMT divergence, I look at the SMT divergence for a possible reversal. So I look for it when we in a extreme premium or extreme discount. That's when I start looking for it, because I look to see which one of them, if we're in extreme discount, I look for one of them to fail to make a new low, right? And once I see one of them fail to make a new low, that's when I be like, okay, there go my SMT divergence, and I start looking for the buy on. And I only do the ES. So just say if I was a Dow trader, right, and how the NQ failed to go lower while we in a discount, then I would start looking for a buy on the Dow. I'm an ES trader, right? The NQ failed to go lower, so start looking for the buy on the ES, right? It don't matter which one failed to move. That's how the SMT divergence work from what, you know what I'm saying. Once I went back and started studying the ICT stuff, we disrespecting this order block right here. We disrespecting this 15-minute order block right here. Let's see how this play out. Right here, we came down to an area of support and rallied off of it. So this right here, from there to there, would be a smaller range. So this right here may act as a rejection block, because you can map this out from this low to this high right here as a smaller box. If you was really scalping, you can make this a 15-minute box right there. And so this right here may act as a rejection block for a small time frame. It may just take off, or it may just fail completely, and we come down and punch that sell side in the face. Let me mark this New York open real quick. Okay, so we just got back down below the New York open again. So now working on a tiny red candle on the SPY. All right, now. There we go. Tiny red daily candle on the SPY right now. Came close to that daily equilibrium. Came really close to that. Is that the daily equilibrium from? Oh, I didn't even adjust the SPY. It ain't that far off between Thursday and Friday. The candles were really similar. So I ain't even adjust nothing on the SPY. SPY still outdated. Oh, pop back up kind of quick though. It was just a red candle when I started moving those lines. So hit that rejection block and took off. Y'all see that? What I was just talking about? This right here, we came down to an area of support right there, which was this liquidity void, fair value gap, and reacted off of it. So like you can place this as a smaller box from that low to that high. This right here might act as a rejection block. We came down and touched it and then took off. That would have been a nice little scalp right there for a day trader. This stuff worked, man. This ICT stuff worked. You sit here and just read these candles like this right here. And people like, tell them, why don't you just do the cause, man? Day trading is stressful, man. It's stressful day trading. Stressful taking that risk on every day. It's really stressful. I don't care how right you are. It's still very stressful. Drive you crazy. It would drive you crazy. Excuse me. So the SMT divergence worked again. It wasn't one on the ES up there because I didn't want to mark it because I was waiting to see if the contract was going to change over this morning, and it did. But you did see the marks on the NQ and the YM and the SMT divergence. It worked again. Again, the way I look for the SMT divergence is when we get to like an extreme premium or extreme discount. Once we get to the extreme discount, then I'm looking for a potential reversal. And how I look for a confirmation of the reversal or the potential reversal is one of the indices of fail to make a lower low. It'll fail to make a lower low when we're in the discount. When we're in an extreme discount, looking to turn around. When I'm looking to sell, when we're in extreme premium, one of the three indices gonna fail to make a higher high. Like it's gonna fail to make a higher high, just like I put in the Discord the other day when I was like, we got the SMT divergence. This is usually the precursor to selling. Don't switch. God dog, they do that every time when I'm trying to grab that. Oh, shout out, one of the cousins had a question. They put it in Discord last night. They was asking about when trading gaps on the daily chart, how do you determine your expiration date? I responded to it today. My response was expiration dates are based on personal risk management and available capital. I tend to buy 14 to 16 days out or so for swings I plan to hold for 1 to 3 days. I also avoid entering on daily PDAs during consolidating markets, right? And so what that means is, like, just take this for example, right? If I'm looking to, if I want to short this daily fair value gap right here, if the market is like consolidating, I'm not going to get it. I'm not going to buy any puts on this daily fair value gap if we consolidating, if like we coming up in front of PPI, coming up in front of CPI, coming up in front of FOMC. I'm not going to take a put off of this fair value gap right here because it's consolidating. We coming up, we sliding to the right. We coming up in front of news. You see what I'm saying? But if we not in the consolidating market, then I would just buy my puts based on, I wouldn't be buying puts on this because this is in the discount, but just pretend like this is in a premium. I will be buying puts on this right here. Like if today Tuesday, I'll be buying puts for like next Friday off of this right here. If this was my entry, I'll be buying puts for next Friday with the anticipation of taking them off, like maybe if it move a lot tomorrow, if it don't move a lot Thursday, at the latest Friday. But I'm gonna be buying them for next Friday, or you know what I'm saying, 2 weeks from, you know what I'm saying, like I just look at the chain and find something that's like roughly 14 to 16 days out, somewhere in between that. Sometimes 18 days, depending on what day of the week that I'm buying it. But yeah, I was coming in here to right here, right when I was like, is all three indices made a beeline to sign it? No. Right here, this one right here. NQ did not take out buy side Friday like the Dow and ES. This type of SMT divergence is usually is a precursor to selling, right? So we were in extreme premium, right? We was up here in extreme premium. The Dow made a significant higher high. The ES made a slight higher high, and then the NQ did not make a higher high, right? And we was in extreme premium. So like I said, this was a precursor to selling. And then, as you all know, when we came in the next day, we did sell off. We did sell off on that Monday. Matter of fact, because I bought my puts that Friday after seeing this divergence. I bought my puts at like 410, 405. It was right after the close. And then Monday is when I sold those puts. That Monday. That was when Zay talked some, why you ain't just move your blah 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 blah. That was then. So that's how I used the SMT divergence. Initially I didn't understand the SMT divergence. I was totally lost when ICT was teaching that. But like after like watching his videos, like really paying attention to it and going back and just like back testing it myself, that's when I started to kind of understand it. And that's what I be looking for like confirmation of moves sometime. Man, go drink some coffee. So you making me sleepy. You can't be doing that at your office if you watching me. Thanks. I saw your response. I was looking at Amazon and there's an old gap. I'm trying to figure my way out how long it would take to fill that. Oh, Rhonda, that's you? That's you on there? What y'all see? Y'all be having these different screen names, be messing me up. Be messing me up with these different screen names. I would have never guessed that was you. Wealthy one. Okay, then, wealthy one. Wealthy one. I see your face. That's your face. Wealthy one. I ain't mad at you. Wealthy one. I'm getting hungry. Yep, the gap was October 27th speaking. Yes. You said Amazon? Let's look at Amazon. Let's look at Amazon. Call the market. Yeah, we still dilly-dallying. But y'all see how this stuff work on all time frames. Man, when I was talking about we came down to area support, which was this liquidity void, right there. We was consolidating. So that's equilibrium right there. We came down to the discount, hit this discount PD array, right? And then reacted off of it, right? So now this right here is a new little section of price. When we came back to that rejection block, we reacted off of it, pushed up. It's fractal. All this stuff is fractal. It work on all time frames. This stuff work on all time frames. Are we looking at Amazon? Oh, is that Amazon? I think that's Amazon. I had I think I had an alert. Oh no, I said a Google alert. I don't know if y'all can see this. I don't know if y'all can see that right there. It says, yeah, it's a Google $90 alert. Amazon calls with a question mark right there. Look at God. Look at God. We all on the same sheet of music. And then Randa was talking about Amazon. Yes, I was looking at Amazon and there's an old gap. I'm trying to figure out how long till it fill that right there. We all looking at the same thing. Everything. Why I still got this up to the side of my head? Why? Okay, so I was looking at because I have peeked at Amazon. I was looking at where Amazon was at. Let me go back and look at this real quick. Okay, so looking at the weekly Amazon. Okay, yeah. All right. I was waiting for Amazon to see if it was going to take out these lows. And then if Amazon ran those lows, I was waiting to see if it run those lows. If Amazon ran those lows, that's why I had Amazon calls that low on that weekly is 85.87. So 85.87 is that low. So I was waiting to see if we run those lows on that Amazon. This stuff working on Amazon too, because we was coming down and then we started consolidating right there. So let's pretend like we can't see those candles over there. All right, we're gonna pretend like we can't see those candles over there. Push these candles out there to the side like that. All right, and then we just gonna bring the fields down to, get out my way, price thing. Bring these fields down. All right, we're gonna go get it to the consolidation area where we consolidating that. Okay, that's the bottom of the screen, so I can't move no more. So let's just move it over. Then look at where the price stopped at, right around that same area. You know what I'm saying? I couldn't get to like a perfect spot because we can't see the future. But look where it came at before it had like a reaction. Came to there, right there, that consolidation, and then pushed back up for these weekly candles now. It came down and it pushed back up for this week. Had that reaction right there on that little reversal. After that fair value, came down to that fair value, pushed down, then reacted right there. Then now it's pushing back down again. It's pushing back down again. So that's why I was waiting to see once we run this sell side, I was gonna see what it looked like. Let's go down to a daily on Amazon real quick. We got a full gap right there. Got a full gap right there. So if it was little Timmy Rogers, right? This is what little Timmy Rogers would be looking at right here. All right. So we got this huge gap, right? I don't have anything. All right, so got a price void above us. Let me look over here, see if there's anything below us that's of any importance. All right, nothing below us. Got this low right here. All right, so got that low right there on the monthly. Okay, go back to the daily now. Okay, so based off of what I just peaked right there. Now, I was looking at Amazon, seeing if we ran these lows. So, for the long side on Amazon, I would like to see it come down here and take out this low, maybe even get down to $80. Right, come down here because we're so close to this 81.30. Right, we came so close to that 81.30 right there, and now we're trading back down at this, coming toward this low right here, and we starting to consolidate right here on the daily. So now we're gonna take our little handy dandy fibs and just project real quick. We're gonna project real quick with our hand because we consolidating right here. So, and again, it don't mean we're gonna come that far, but the market just see this as fair value for right now because we're consolidating. And if we put the field, oh my God, look at God. Look at God. If we put the fibs right at the open of this candle right here, that's pretty much almost perfect with that low. That's almost perfect with that low. And I just said I would like to see it come down to get that low right there. Right? Because we're too close to it. And if we put it, that's pretty much center of the equilibrium because that's the open of that candle. That's the open of that candle and the open of that candle. And that's the big beefy candle right there. So that's pretty much consistent right there. So again, come down to that low. That's 81.40. I think the low was 81.30. It was. Come down to that low right there. And then calls back up to that void right there. You know what I'm saying? A few months out. If you got the capital. Right? Calls a few months out if you got the capital. You know what I'm saying? Up to that, no, not that price, but like that would be my target. Back to that, back to this void right here. That would be my target. If we came and took out that right there, calls back to that target right there. If we came and took out that low, boom, take out that low, calls back to that target right there. And then let's see what them calls cost, how much that stuff costs. We say TOS. What that question was? Is NinjaTrader the only platform that allow backtest? Nah. Oh, somebody answered that. You can backtest. It depends on the. I know TOS lets you backtest. I think E-Trade lets you backtest. I'm not sure. I don't have E-Trade, but I think they let you backtest. I'm not sure. You can backtest on TradingView. I've never done it, but I know people who said they've backtested on TradingView. I don't know if you gotta. I don't know if you can do it for free or if you gotta pay for it. I'm not sure, but those the only ones that I can think of that I know for a fact. TOS. I know people say they did it in TradingView, but I don't know if it's free or if you got to pay for it. And I think E-Trade. I'm not sure. Don't hold me to the E-Trade. What was I about to do? Oh, look at the premiums on that stuff. While I'm waiting on that, look at Google. I had set an alert on Google. This is why I set an alert on Google. Got this. We got a daily gap right here. It's actually a liquidity void full gap, right? And I set an alert in my platform to let me know if Google got down to $90. And I picked $90 because that's roughly the mean threshold of this daily void. So I wanted to alert me once we got halfway through the void. Once we got halfway through the void, then I could start watching it. You know what I'm saying? And so that'll bring us down to this. And so we got another little gap down here that I didn't see. We got another gap down here that I didn't see. Yeah, but we got an order block here. We got a full gap there. So I was looking at that come back there. We making a nice sell side imbalance right here. So once it got down to, if it got down to this void around $90, right? I was looking at maybe some calls to like maybe catch like a Santa rally coming back up. You know what I'm saying? Buy some calls out for like maybe like March or something like that. Catch a nice little Santa rally back up after hitting this void. All right. So we got the breaking market structure here. Come down, come up, coming back down to these stuff that we left off right there. All right, we got a little something going on there. We're pulling back, but for the bigger scheme of this price leg right here, pulling back to that. I know that's a breaking market structure to the downside here, right? But that's based off like a shorter little piece of the puzzle, whereas from this low to that high, you're pulling back to a discount into this gap here. This full void there, come down. We should feel that in. If you get a right signal, that'll be a nice little long to go there. Platform open up. Let's go back to Amazon. Amazon. Okay, so Amazon, what the price at? So we're just gonna look at the price for what's going on right now. Look at the money and out the money. So right now at the money, let's go out to what's this, December, January, February. Let's go out to February, 67 days out, right? So right now at the money is a $90 call, and they're going for like $6.90 right now at the money, right? But so depending on how long it take, if it was to come down here to try to take out these lows, right, and it got down here, then the at the money would probably be somewhere around like $80 or something like that. So you'll be like, right now these 80s are at $12.80, right? So if it dropped down there, you would expect them to be less than $6.90 because it's going to take time to get there. So time is going to eat away at the price. But theta going to eat away at the price because it's going to take time to get down to that price, right? And then once it get to that price, the at the money right now is going for $6.90, right? So at the money in the future on this same expiration day should be less than what it is today. So you would expect it to be less than $6.90 per contract at the money once it get down to this this low down here. If it's more than $6.90, the premiums are super inflated unless it went there tomorrow. You know what I'm saying? Unless it went there tomorrow. So then you go at the money, $6.90. If you bought like at the money call, right? And then just say it, you know what I'm saying, reversed. It got down there and you bought the $80 call, right? You bought the $80 call for $6.90, right? And then ride it back up, right? That would be your low hanging fruit right there at the 97. You know what I'm saying? All things equal. If we just came straight down there, the low hanging fruit right there at 97, right? So if you bought the $80 call and you get up there at 97, you $17 in the money. If it hit 97, that's $17 in the money, right? Depending on what you paid for it, right? Depending on what you paid for it, you're gonna be at least $17 in the money, depending on what you paid for it. Because it's at 97 and you bought the $80 call. And then your ultimate target would be back to the daily void up there. And then you can always give yourself more time out if you feel like buying February wouldn't be enough time to allow it to move in that amount of time. Does Google move like that? Let's see. Let me see. It was a chop from Grace. So since the last time we touched it, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 1, 2, 3, 4, 6, 27, 28, 29. So 29 days from the last time it touched that void, consolidated chopping. So that's like, you know what I'm saying? Another, you buy in February, giving it to February to make that same move that it took 30 days to make. I really could have just came here and clicked there and went there and saw that was 29 bars. So 29 as a 29-day move. It covered 29 bars. So a month worth of trading. And then you'd be like, oh, that's too tight. I have to push that out to March. I have to buy March to give it time to get back up there based off how Google been moving. I have to buy March to give it time to play out. The further you push it out, the more it costs. But it's giving you your time. March. Contracts are a little more. They even got an extra one in. They got an $89 in there. So at the money is a look almost $200 more. So the contracts will march out almost $200 more, like $100 and some dollars, $135 more for the next month out. So if you got the capital for that, that might be an option once it takes out those lows and give you some kind of reversal sign. But again, just thinking out loud. This kind of stuff I be thinking about. Same stuff I was thinking about on Google. And you see how the stuff it lines up on there too. Now I'm curious. I want to see how that play out. I'm gonna leave that there. I ain't gonna delete that off of the Amazon. I'm gonna leave that on there. And back here, Google. I'm still watching Google down to 91.72. I'm watching Google once it gets down here inside this void right here. Forgive me a nice reversal sign. I might. We shall see. I'm tired for real, and I'm hungry. Still chopping. We're back in Chop City. Chop City. Chop City. We still chopping. Still right here at equilibrium. Still trying to get back to the daily equilibrium in front of CPI. Is it CPI tomorrow? Yes, in front of CPI. Still trying to get back to that daily equilibrium, but we sitting right here at this equilibrium here. Let's check this last price leg right there. Let's see what that look like. See if that line up with that last price leg. And it do. Look at them. Almost tick for tick from what we projected to there, right? From what we projected coming from. Oh, get on that. Oh, yeah, we did. We did have it there. Let me unlock this. From what we projected, push it up. Right there to the boom. Right there to the open of that order block right there. Right? That's what we projected to. And look at the price leg. It's consolidating right there at the equilibrium of this last price leg right there. So based off this last price leg there, it's stopping there, pausing at the equilibrium, just consolidating. So price, I was looking for it to make it back to the daily equilibrium before consolidating, but price came back to the equilibrium of this last price leg, the last piece of the price leg on Friday, and it's just been consolidating there. Price just made its way back up to equilibrium, last price leg, consolidating. And looking at this right here, if it wants to complete this market maker buy model, it'll take it back up to right there. See, consolidating right there. From this piece of the price leg to that consolidation to the completion of the market maker buy model. Look at that. All this stuff, it lines up and makes sense. Looking at the, and like back in the day when I used to watch stuff like this, I used to get confused thinking that it was because of the fibs. I used to try to use the fibs to just like do stuff without understanding why I was running the fibs. But now that I understand why I'm running the fibs, it make a whole lot more sense. Like now, like I was over here looking at this, right? Just showing how this lines up. I was projecting for, okay, this is the last low before we had heavy distribution, then we consolidated. So when I run the fib to, what I'm saying, this order block right here, run the fib to this order block right there, it puts it right in line with the equilibrium from this last price leg down over here, right? This last price leg down, it puts it in line right there. That order block was set right at the equilibrium of this last price leg down. And then now we're consolidating right there at that equilibrium. And if we look to finish this market maker buy model from this last thrust from the heavy distribution, if we go up to the top of that market maker buy model, right, we're still in that consolidation range. It's still in the, it's close enough for government work. We still consolidating in this same little area right here, right? If we complete this piece of the buy model, if we just came back to fried this equilibrium, is still all in that same area where the algos have left a breadcrumb with an order block there, which is 50% of this price leg down. But back in the day, I used to just try to run the fibs and make the fibs do the work for me. But now I understand how to look at the price, see the clues that the algorithm's leaving, and be like, okay, this is the draw on liquidity. How are we going to get there? You know what I'm saying? Stuff like that. The way my account is set up, I'll need to enter out the money calls. Look at January 20 call price. Oh, yeah. Hey, and the way your account be set up, you gotta, you got to play it in accordance to the way your account set up. And I'm glad you said that. Right? Right. Let's look at some. Right. It's all based off of capital, right? So let's just say we look at looking at Fed. We just gonna look at the same thing we're just looking at on Amazon, right? Okay. Looking at the same thing we're looking at on Amazon, right? And we're gonna say right now, boom, we done came down and took out the lows. We just pretending right now. We done came down and took out the lows, and it's giving us a reversal sign, and we want to enter right now, right? So we want to enter right now. So right now we took out the lows, and the lows we took out, and now that we got our reversal sign, and we looking at, right, the at the money is $90. So we're in our reversal. We getting ready to buy right now, but we can't afford to buy this $90. Now, the most important part about what I'm going to say is it has given us our reversal confirmation, and now we're going in with the buyers. Now we're going in with the buyers now. So we don't have $6.95 per contract to go in, right? So now, boom, we come over here and we look, we say, okay, this right here is our low-hanging fruit, right? This right here is our ultimate target. We just want to kiss it. We don't want to feel it. So we're looking at 105 is our ultimate target, and we're looking at 98 is our low-hanging fruit, right? So 98 is our low-hanging fruit. 105 is our ultimate target, right? So we come in here, and the closest thing we got to 98 is 100, right? So 100 is our low-hanging fruit. 105 is our ultimate target, right? So we go in. We don't have $6.95 per contract, but we do have $3.25 per contract, right? So we get the $3.25, right? And 105 is our target, right? So now we already moving. Don't worry about what the chart looking like. We buying it because we already moving. So let's just fast forward and say 2 weeks from now, we hit the 100, right? 2 weeks from now, we hit the 100, right? And what's the price trading at right now? 88, right? So $12. So right now we're here, and so 10, 510. Okay, so then we'll go 510. We just moving back. We pretending we moving back right now, pretending that the price moved $5, $10, right? So now it moved. Like this is our strike, right? So we pretend the price moved $10. So we're just gonna move $10 back on the scale. Boom. That's 100%, over 100%, right? You don't have to get all the way to your ultimate target to make the money. You just have to do it smart, and you don't want to go super far out of the money where the premium really not going to move. You want to stay within a reasonable range when you're going out the money to pick your targets right there. So now, boom. And then on most platforms, they give you like I call it a probability range of where it could move to the upside and downside during the time frame, right? It's saying, okay, we can see price getting down to as low as 75, or we can see it getting up to as high as 100 by February 17th, right? It give you like a probability range. I don't know what it's called for real, but it be how it's gray in the middle of mine. It give you like a range where it can see it getting there. So you don't want to be way down here trying to buy it for this date and hoping. That's gambling, right? This is like playing the probabilities. So you can get to it. You don't have to buy like at the money, but when you buy out the money, you have to, you know what I'm saying? You have to play it smart. You don't want to go way out the money down here like 125. You don't want to be trying to make it get all the way back up to this high right here by February. That's way too risky, because if you look at round about 120, 125, there's only a 8% chance that it's going to get there. Looking at the delta, it's only an 8% chance that they think it's going to get there. Well, thank you for shortening the learning curve for us. What learning curve? What learning curve I shortened? I like the way your platform outlined those based on probabilities. I'm tired for real, and it's time for me to get off. It's 11 o'clock. Y'all hung out with me my whole work day today. Y'all hung out with me for my whole work day. I usually be sitting back here watching Country Wayne videos and stuff like that, and we're still dilly-dallying. We still dilly-dallying right here. What's today? Monday? Yeah, Monday. I'm gonna see. I'm gonna check with my mom and see what she got going on. We still haven't had an opportunity to sit down and take her out to dinner yet, because my sweetie been working. My mama been hanging out with her friends. She been doing different. We ain't had a chance to get our schedules aligned. So I'm gonna call. Hey, look. we was taking off like we was going to go to that equilibrium. We was taking off like we was going to that equilibrium. Which one? Where do we put it at? Then put it on the spy. Where do we put that? I thought we had a fib on something. Not Google or Amazon. I thought we had a fib on, because we was looking at it to get back here. And we moved it to the consolidate. We was like, if we put it, did I delete the fib? Yeah, because it was here. Yeah, I guess I deleted the fib, because we had it on this low right here, and we pushed it up to that order block right there. And I was like, it'll put us right back at there. And then I did delete it, because I checked it for this price leg here, and I checked it over there, and I deleted both the fibs. I did do that. But I want to see if we got there. Anyway, man, I appreciate y'all for hanging out, man. 36 of y'all stuck around and for my whole work day. Y'all stuck around for my whole work day. Yeah, I had a film on Amazon too, but I was talking about the one that was on the ES. I deleted it off. I remember deleting it off because we was looking at this price leg here and saying how it consolidated. Look at there, it's pushing. Did some news come out today at 11 o'clock? Oh, this just the no. Look at that, boom, back at that equilibrium. Look how we just rushed up there. Look how we just rushed up to that equilibrium, filled in that 15-minute fair value gap. Did some news or something just come out? Kiss that equilibrium. I can't wait to have 2 to 4 hour work day. I appreciate that, Marco. I appreciate that, SJ. But I'm gonna tell you like this. My work days be way longer than 2 to 4 hours, right? My work days be way longer than 2 to 4 hours. Like, I'm constantly looking at the charts. I'm but I'm only open to trade. This is the only time I set aside to be in front of the computer until 11 o'clock. Like after, like y'all look at it. Look at our fibs. Look at our fibs going to work. Look at our, y'all see our fibs going to work. Look at our fibs going to work. This the only time I dedicate to be in front of the computer. The rest of the time I might be laying on the couch, might come back in, peek. But this is my time to be dedicated in front of the computer, watching the price just print. I just sit here every day from the time I get on live with y'all up until 11 o'clock, and I just watch the price print. Like I have like YouTube over here on the side like this right here, looking at Country Wayne videos or looking at whatever I want to watch, and I just be watching the price like this right here print. Look at them fibs working. Look, and this time that tick for tick on that thing. We eyeballed that perfect from that order block. Remember I said from the order block right there, and we set another order block there. Tick for freaking tick. 11 o'clock algo. 11 o'clock. London closed. It's the last, this power hour for London. I think London closes from like 11 to 12, I believe. So this may be power hour for London. I don't know, but that thing started moving like somebody said something. Like somebody said something. Let's look at everybody. Let's just look at today. Nothing. Oh, wait a minute. Yeah, nothing. Nothing today for anybody. Nothing at this time for anybody. Oh. That round slightly this week. Police in China arrest gang who laundered 1.7 million. Nope. JP Morgan said nope. That's 37 minutes ago, 15 minutes ago. Got no breaking news coming out. I don't see no breaking news at the top. I ain't getting no notifications on my watch and nothing popping up. Things be so different on the computer. It be so it's got latest news right here. There it is over here. But yeah, no breaking news coming out. Consumers see inflation easing considerably in New York next year. Fed survey shows this was from 11 o'clock right there. There you go, right there. That's it. That's it. I'm saying this. You say Microsoft, but look here. 11 o'clock, they posted this at 11 o'clock, right? At 11 o'clock, they posted consumers see inflation easing considerably in the next year. New York Fed's survey shows, right? So right at 11 o'clock, get off my screen, Jim Cramer. So right at 11 o'clock, it took off right there on this 11:15 candle. As soon as that news hit, it took off right there. There go 11:01, then 11 o'clock. Look at that. It took off at 11 o'clock. As soon as that news hit, and look at that, it hit our fibs, and now we consolidating right there at the daily equilibrium. So let's see what the algos do. The algos use that to push up to the daily equilibrium, right? I can go ahead and take that fib off now. So that projection worked again. I didn't note that, but for anybody who was noting that, I took a mental note. I didn't actually note it like I usually do, but we took the fib from the 4 o'clock candle. It would be the 3 o'clock candle on Trading View, and it was at 39.62, and we ran the fib, put the 50% on the 5:30 candle, which was an order block. Would be the 4:30 candle on Trading View, which was the order block, and it matched up to another order block. So you had a bullish order block at the 5:30 candle, then you had a bullish order block at the 9:45 candle, and we set the fibs right at the open of those two order blocks, and the price went up, and it that gave us a projection of 39.91, and so far on that candle, the high was 39.91.25, and it had a reaction to it. That would have been a nice little scalp right there. You're getting down to close to 10 points. So as of now, that's that would have been a good scalp. That would have been a good scalp. Let's see how it play out. Let's see if it just hang around here. We got a breaking market structure to the upside. We got a liquidity void right here on the 5-minute. You got a 5-minute fair value gap down here at the breaking market structure. If it came down and filled that 5-minute fair value gap, that would give you a clean 10 points on that sell up there. If you're a true scalper like 100, you probably done scalped out of that already. Took those 5 points and went to the house. But that was the fib extension thing there for anybody who was taking notes on it. And it did go. And also we found that it lined up with this last price leg down over, was it this price leg here? Yes, from there to there. Yes, it was. It was that price leg there. It lined up with this last price leg down. Equilibrium on that price leg was right around there where the order block was, right where it was consolidating again, right where this order block, both of these bullish order blocks opened up right around equilibrium. Equilibrium over here was 39.77, 39.7650, close enough for government work. So the equilibrium on this last price leg down was the same equilibrium on this price leg, moving up with the projection up to the 39.91. You missed Fishbone earlier about fib level. He was trying to get your. Oh, you should have pulled up. You should have pulled up and got my attention. What you want to know about the run the fib levels? Did that answer you when I was just doing that right there? Fishbone, did that answer you when I was just doing that right there? If not, click the link at the top and pull up and ask me, or just type it in again. When you say fib levels, did I just answer it there when I was talking about where we put the fibs at? Tim, I'm running one. Oh, you talk about what all I got on mine is just I just got mine like with only thing I got on my fib is like equilibrium That's it. Equilibrium and half a deviation extension and a full deviation extension. So on my fibs, the only thing I put on my fibs is, now I got 2 fib setups, right? I got, well, that's but it's the same thing. So, okay, based off of what I learned from ICT, right? I have, if I was to do it how I learned from ICT, I would have a 79, a 70.5, and a 62, right? That right there is how I would run it based off how I learned it from ICT, right? And then the extensions is a half a standard deviation and then a full standard deviation. Those are the negative numbers. The extension is the negative numbers on Ninja Trader, and I think it's negative on anybody. So the extension up is the negative numbers, right? So I gotta extend it out a half a standard, and then so based off what I learned from ICT, from 62 to 79, that's the OTE entry. So you're looking for, like, if you look for it to go up into the premium, then you're looking for it to retrace back to that from 62 to 79. That's the OTE price range. So that's what I learned from ICT, as far as like if you're gonna use it for optimum trade entries, right? That's what OTE stands for anybody who don't know. But personally, I don't trade OTE anymore. So the only thing I show on my fibs are equilibrium. I just show equilibrium and then the extensions, right? So for my personal settings, get out of there, 70. Why did you stay on there? For my personal settings, all I got is where I'm running it from. That's 100. Equilibrium, that's 50%. And then where I'm running it to, that's 0, right? So I'm just looking for equilibrium with my fibs, because I just want to know what's premium and what's discount. And then the extension is the same, a half a standard deviation and a full standard deviation. Now, if I'm looking at the, I got one that I got set for like the CBD dealing range that ICT be talking about. And the only difference is like it extends up, right? It extends up 1, 2, and 3 standard deviations. I don't have the half a standard deviation on this one. It's the same thing where I just look for equilibrium, because I only want to know the premium in the discount market. That's the only thing I use my fibs for, finding the premium and discount market of the dealing range that I'm looking at. But the other ranges is what I got from ICT at 62, 70.5, and 79. Those are the ones that I got from him. He got a video talking about that, about OTE and how he set up his fibs and why he set it up like that. He found it to be the optimum retracements that the market does. And that's when he was pretty much dealing with like 4x. So I don't know if it translates with that being OTE. It used to translate beautifully, but I don't like OTE anymore, because I feel like I'm relying on the fib instead of relying on the price action. I like to just look at the price action. Like, I like to say, okay, it's coming to this fair value gap, and not say, oh, it came to a 62% retracement. You know what I'm saying? I know it's coming to this PDA. Whereas I'm just running this line. What if I run my line to the wrong low? So now my 62% up here and your 62% down there, but that fair value gap gonna be in the same place on everybody's chart. That's why I don't like using OTE no more. I feel like I'm putting it on the fib. Whereas when I'm looking at the PDAs are in the spots for a reason, and the algo's dropping them breadcrumbs for a reason. It put that order block there for a reason. It put that order block there for a reason. And just sitting there reading through the price, you see that order block lined up with the equilibrium from this price leg right here. Boom, that order block lines up with that right there. That order block lines up with that right there. Now that all of that lined up together, coming back to this price leg over here, before that price leg even was finished, we ran the fibs from here to that order block, right? We went from there, from this low to that order block, and said, okay, price should come up to there. Price went there exactly, right? When I put that on 3, what's the opening of this? So the open on that is 376.50, right? So it ain't giving it to us. Okay, 376.50 right there, right? What's the low on this candle right here? The low on that candle is 362, right? So we got the low, so we put it right there. That's how we had it. We put it there and we had 391. It went exactly to 391.25 before it even got made. So this stuff is being put there for reasons. That means that we are in sync with the algos right now, based off what we was looking, based off what we was calling to be the most probable thing. We now know that it has happened, and y'all sat here with me through my workday. We now know that we were in sync with the algos. Now y'all just had an opportunity to sit down with little Timmy Rogers during his whole workday to see what he was looking at, what he thought was most probable, and see it play out in real time. You're welcome. You're welcome, Fishbone. Now, I'm getting ready to go for real this time. I appreciate y'all for hanging out with me. Hopefully, y'all was able to pick up something. I know, like, sitting there looking at the charts ain't sexy, but this is what it takes to start to understand this stuff. It takes just sitting here looking at these charts and, you know what I'm saying, studying the price action if you want to get good at reading the price action. You know, you don't have to sit here every single day and watch these candles print. Don't get me wrong. And don't think that I'm saying you have to sit here every day and watch these candles print, because you don't. You can do the same thing by just watching the daily price action, because it's all fractal. It's all fractal. Just look at the daily candles, seeing what they're doing, right? You can, like the intraday candles, you get a feel for how they print, right? Looking at the completed daily candles, you get the same story, right? Because you're watching the daily candles print, right? You're looking at the daily candles print. So the time frame you're on, you're watching those daily candles print. Every day you come in and you're watching those daily candles print, right? But you're just seeing them one day at a time. So you don't have to sit there and watch it every single day, every single minute, right? You don't have to do that. I can go over here. All right. These daily candles right here. You don't have to sit there and watch every single minute, because these are daily candles. But when you come in tonight, it's going to be another candle there. So you're going to be like, okay, so price went up. We ran buy side, right? We came down. This day we came down and had a reaction off of this fair value gap right here. We came down, had a reaction off this fair value gap. The next day we sold back down, closed the fair value gap in. The day after that, we ran buy sell side liquidity. Then we started to consolidate. You know what I'm saying? We consolidating in front of CPI, right? CPI is tomorrow. Then once CPI come out, you'll see what that candle did. Then you're going to be like, okay, CPI pushed us up, or CPI pushed us down. We took out sell side liquidity. You know what I'm saying? And then the next day we got FOMC. Oh, FOMC pushed us lower, or FOMC pushed us higher. But you just watch the candles, watch how they print on the daily thing. So now you're looking here, you say, okay, we came to this fair value gap, and if we weren't consolidating, this might have been a good time to short. But since we consolidating in front of news, you just hold your horses. Wait to see what the news give you. You know what I'm saying? Once the news come out, then you see how it react. You got another fair value gap down here that you're watching. Will it push us down and fill that fair value gap? You got an order block right here that you're watching. Will it push us down to that order block? But you're just watching the candles print because it's all fractal. Just like over here, you had a daily order block right here, right there. So you had a daily order block right there, and then you had, you know what I'm saying, because we had the violent reaction making this an order block. Then this is on September. We made that an order block on September the 13th, because September the 12th and September the 13th we had a violent reaction making that an order block. We didn't come back to that order block until December the 1st. December the 1st, we hit that order block to sell off of. And why would you sell off of that order block right there? Because it is in the extreme premium of your dealing range. You're up here and it's in the extreme premium. So you would be looking to sell off of this daily order block if you're an order block trader, right? Right. So now, Mike, let's look at this right here while we talk about it, right? Right now, you go equilibrium right here, right? Little Timmy Rogers, I would not have got if I'm an order block trader, I would not have got this sell right here based off the order blocks. Why? Because on this dealing range, I'm just telling you how I trade. With this dealing range, as an order block trader, looking at this dealing range on the daily alone, right? This right here is too close to equilibrium for me to be wanting to sell off of, right? For some people, this right here would be a perfect sell. Why? Because it's in a premium, right? I've had terrible luck trying to sell or buy this close to equilibrium. So I don't take trades, swing trades, that is, off of areas this close to equilibrium, right? But for anybody else, that's an order block trader. It's in the premium. That's an order block on the daily, right? You hit that order block, you get your reaction. The next day, you buy your puts, right? You get your reaction. You set your thing to buy your puts, whatever price you're willing to pay for them. You know what I'm saying? Based off what they were selling for this day right here. You pick a price, you put it on your platform overnight. The next day you get picked up, right? It was successful for you. You got your risk tolerance and all that right there, right? If price gets back up above this high, I'm cutting sling load. It was successful for you, right? Come back up again. This little order block right here. If you want to try to take this little order block right here, you know what I'm saying? This one right here wouldn't have been successful for you, right? Your stop loss would have been right above that right there. Boop, you wouldn't have been successful on that. But it really don't, no harm, no foul. You can't win them all. Personally, little Timmy Rogers, with this little small, how small that candle is right there, just based off the size of the candle itself, right? I'm really leery. Y'all know I already be leery of those little order blocks like that, right? So, but anyway, if you're taking it, you got bust in the head, right? Then now we're up here in extreme premium. This right here is when it's looking real appetizing to little Timmy Rogers. Anytime I got PD arrays well up here like this right here and price trade all the way back to it, oh, I'm slobbing at the mouth on them now, right? Boom. Gone. Right? There you go right there. Now, this one here might have been a little tricky entry. This might have been a little tricky entry for people who don't have the time to sit there and watch it. Why? Because when you got into the sensitive area of it, right here, right? It hit that sensitive area and gave you a reaction, but it didn't hit the body, right? So if you don't pay attention to the sensitive area, you probably wouldn't have been able to get into this until this day right here. This day is the day that's you would have been able to get into it because you hit it, had the reaction off of it, and then whatever price you're willing to pay over here. The reason why I say you may not have got in, because when you hit it here, right, depending on the price you set to get in overnight, you may not have gotten picked up because price moves so fast. You may not have gotten picked up, and you probably would have FOMO'd into something if you don't have the time to sit down and watch it. But I don't know why I started saying that now. I lost my whole train of thought. Hopefully somebody got something out of that. I'm finna go. I'm finna go. Hey, I'll see y'all tonight at 6. Oh, I'm gonna check with my mom, see what she got going on. If my mom ain't got nothing going on, we finally gonna try to do dinner with her. If my sweet ain't got nothing going on, we finally gonna try to do dinner with my mama. If we do dinner with my mama, we not gonna do the price action recap. I appreciate y'all for hanging out with me for my work day. I'm 30 minutes over. I don't get paid overtime. Hey, I'll drop it in the Discord if I'm gonna do a live. If I don't drop nothing in the Discord, then we not doing a live, and I'll see y'all in the morning. I appreciate y'all, man. I'm gone.